What lesson did you learn from that experience that you'll take with you into every other deal that you do?
Yeah, recurring revenue. I'm done with project-based businesses. I'll tell you that. Pardon my French.
Chandler Reed has taught over 200 people how to buy their first business through his company, SM Bootcamp, and he's here today to give you a raw look into what it's like to actually buy, transition, and operate a business. You'll learn how Chandler found and negotiated his first deal.
So I'm like, hey guys, he wants $1 million. He's about ready to throw in the towel and just shut it down. Let's offer him $400K. Just shot in the dark. We ended up coming in at right around like a pretty significant discount.
Why he decided to go against the grain and buy himself a job.
The running joke in ETA is always kind of like, yeah, you never really want to buy yourself a job. I bought myself like 10 jobs.
And how the SMB journey doesn't just end with the purchase, you actually have to operate it, which is hard.
Like, it was incredibly stressful time for me. It was losing sleep. I had to let a lot of like good people go and restart from square zero.
So if you're thinking about buying your first business, you're going to want to check it out. I promise you guys are going to enjoy it. Love you guys. How big is the business? How many employees do you have? Top line revenue.
So the business, it was a massive turnaround. We talk about key employee risk, key man risk. There's literally one employee with some shared services from the seller's other business. I think the 2020 income or tax return was like maybe $6K or something like that. But so basically year one, when we bought it, we did like 1.1 million bucks top line and about 100K or so, call it an EBITDA. So
and this year, what are you trending on this year?
Yeah, this year we are going to do just north of 2 million bucks, and about 200, 250 in EBITDA.
That's awesome.
Yeah. So those are 2 points. And I guess if you look at that just as 2 points like this, it looks like a nice steady, like, okay, they're doing all right. We skipped over was, in year two, which, I thought it was because I was the next coming of Elon Musk, Bezos, the next business titan. I thought a rocket's a genius out here. Lo and behold, like it was how intimately tied that we were to the multifamily kind of value add transaction market. We just had a sail up and we had a gust force hurricane wind push us upwards. So it wasn't me doing anything. It's just being in the right place, right time. So anyways, in year one, it was like 1.1 million bucks. Year two, which is 2022, we did just north of 3 million bucks. So like basically a triple. I'm like, okay, This is sick. Like we're going to do this again next year. This is easy.
I'm the man. Start calling me Elon.
Exactly.
Yeah.
Exactly. Then year three, we get a gut punch, I guess, when the interest rate spiked in September 2022, that literally brought one of the hottest commercial real estate markets of all time to a freaking screeching halt. And obviously we're downstream of that. No one's buying apartments. No one's fixing up the apartments.
So they just weren't spending CapEx at that point, which you're obviously reliant on them having to make that investment in order for your business to thrive.
Exactly. Yep. 100% project-based business. We live and die by CapEx projects. So in 2023, we did 1.7 million bucks. So not a 50% cut, but a cut. And, all the overhead that I had drummed up to get ready to go double again. Basically had to let go of that and restart from almost square zero, but with, a lot of lessons learned. And I guess I would say the only silver lining of that down year, 2023, where we, that big drop from 3 to 1.7 was, going back to how we structured this deal was basically a big old earnout. And that, we were basically the buyer of last resort. But so long story short, the silver lining of 2023 was we were actually able to pay off our seller financing.
Free, man.
So we're debt free on the business, which is great, but it helps you sleep a little bit better at night. But damn, was it tough to get there.
What's interesting is like, if you look at a graph of the stock market, it's not just up and to the right.
Yeah.
It's jagged, right? It's like peaks, valleys, but the overall trend is that it's up and to the right. I think people forget about the valleys.
Yeah.
They want the peaks, but they forget about the valleys. And so like for you to go from, all right, 1 million year one, 3 million year two, I'm the freaking man. 1.8 million year three. Oh my gosh, I've screwed up. 2.1 million, this year, I think you probably learned a ton of lessons.
Yeah.
It was like
I'm
your
so
own
happy.
course over that period of time.
Yeah, exactly. So, I mean, I'm upset it happened because I had to let a lot of like good people go, that I thought, we had really something special building there. Also was losing sleep. Like it was incredibly stressful time for me. But in hindsight, like the fact that I was able to see like, a big upswing and like, oh wow, this is what this feels like. And then also getting punched in the face and like getting low of lows all in like a 3 year stretch. I'm like, okay, like it just made me so much better of an operator. I still have a lot to learn, a lot to improve upon, but getting humbled and having some early success all in that short span of kind of getting started in entrepreneurship. Like, I think it's helped me get a good head on my shoulders.
I love that. Tell me briefly, what is your business and how do you make money?
Yes. So my business is Get Green NOI. You can look us up, getgreennoi.com to help just paint a better picture of what we do. At our core, we are a project management and engineering and design firm. We come in across the country and install green energy projects for commercial real estate owners, primarily multifamily apartment communities. So that's our little niche. And yeah, how we make money, we go in, complete a project, get paid, and wash our hands, and go on to the next one.
So you have a really cool story. I think a lot of people know you because of the SMB boot camps that you put on and that you're a part of. But this was your baby, right? This was the first business that you purchased.
The catalyst.
I think we talked about this before. It's like 3.5 years ago when you first got into entrepreneurship. How did it happen? How did you find this business?
Yeah. So back then, I had no idea what SMB stood for, what ETA was. Certainly didn't read Buy the Build or the HVR guide, nor listen to Acquiring Minds. So I'm just scrolling on Twitter one day, and I see a tweet from my now business partner, Sam Rosati, who's not only an investor with me, but we've also gone out to do some other stuff after that. But the tweet was effectively looking for someone with a little bit more hustle than capital, needs to know multifamily real estate, and needs to be in Tampa immediately or is already here. And I kind of read that and I'm like, I guess it paints some more color. Like I'm a 25-year-old single dude, like knew I wanted to get into entrepreneurship one day. I have no idea how it would materialize, but I saw a tweet that was basically, hey, I have a lot more hustle than capital right now. 2, needs to be in Tampa, Florida. Like I'm born and raised in Tampa. I'm already here. That's where I was living at the time. And then 3, knows multifamily real estate. That is what I had done up to that point before we bought the business. So I was the client of the business that eventually bought Who We Serve.
Did you know you wanted to be an entrepreneur? Like, were you looking at the time and Sam's tweet was just serendipitous, or did you not know you wanted to be an entrepreneur? You were just kind of on Twitter trolling or scrolling and then.
Yeah, a little bit of trolling too. But no, so I knew I wanted to be an entrepreneur. Like, I guess this is probably a pretty common thing with most entrepreneurs, whatever medium they decide to go. Like, big problem with authority. I hated having like a boss or someone telling me what to do, or needed to be somewhere at some time, or else, I wasn't getting paid. I didn't know what the medium would have been. Like at one point it was, hey, I'm going to do startup. I'm going to create some app or something like that. At some point it was like, hey, I'm going to be my own real estate, like doing my own real estate development and investment. At no point in my mind did I ever think buying a business was even number one a possibility for me, or for folks that weren't, call it private equity firms or Fortune 500 companies. I didn't know what searchers or searching was. Never crossed my mind once, much less buying a business that installed light bulbs at apartment complexes, for lack of a super term. But, the opportunity fell in my lap. And I kind of put it through like a regret, or like some mental frameworks of like, hey, am I going to be kicking myself in 5 years if I don't do this? And the answer was yes. Hence why I ended up doing it.
I'm curious. What's interesting to me is like, this is the quintessential searcher business. If you look at kind of like the profile, it's not sexy. It's a sweaty business. It's not tech reliant. Like you have to actually go out, you're providing physical services and goods. I don't know about the competitive moat. Like, I don't know like what the switching costs are like, or anything like that, but it's not that like long-term type of a thesis. Did you just fall into that, or was that already your thesis?
No, I swear, I just fell into it. So my favorite thing is like the bell curve meme, where it's like the guy with the Jedi hood on, and then there's like a dummy on the other side, and then all the middle people, and they have like the longest explanation for it. And the smart people buy good businesses, and the dumb people are like, buy good businesses. You can consider me like the dumb person on that bell curve or on that chart. I just thought like, oh, hey, I know there's lights at apartment buildings. They aren't going anywhere. They are going to need to get replaced every 5 years. I knew that from being in the industry. And then also kind of having the foresight, and I don't know if we talk much about this, we can get into it later, but so the business that we bought was, this classic, like a need lighting business, like a big physical real world need business. But I also saw where the puck was headed as far as like the green energy and all that stuff. So as of today, we're also doing the EV charging stations installs,
Cool.
low flow plumbing, water fixture installs, pretty much anything in like this green energy bucket you can think of.
You mentioned it earlier, but it sounds like the way you were able to structure the deal allowed you flexibility during that year where you had sales kind of crash. Talk to me about the purchase process and like, what did the structure of that deal look like?
Yeah. So the structure looked like a 25% cash down, 75% earnout. The earnout basically had a minimum per quarter, or it was basically the greater of this minimum, this floor, or 33% of gross profit, basically.
Okay.
We knew at the end of the day, like, hey, here's our minimum, not that we have to hit, like, as long as we can do this, we can ask for, we can get work to this.
How did you come to the price of the business? It sounds like it was a distressed business, so you couldn't necessarily value it off of like a multiple of EBITDA. Did you guys just go back and forth and say, I think that the customer asset value is this? And he said, no, I think it's this. And you just met in the middle, or like, how did you actually?
So it was brokered. A lot of strategic had passed on it. Listing it like during COVID certainly didn't help. So to be completely honest with you, like we had a whisper price or we had an asking price. And luckily it was from an in-town broker of who one of the associates is like one of my really good friends. And I basically caught wind of like, hey, y'all are literally the last buyer. It's either you or anyone. So I'm like, hey guys, he wants $1 million. I know we're the last person. He's about ready to throw in the towel and just shut it down. Let's offer him $400K. Just shot in the dark. Like, let's lowball his ass. Like, and let's see if it works. And long story short, we ended up coming in at right around like 625. I think it was 625K. So at a pretty significant discount.
Dude, that's rad.
So what, at least what we thought the business would be. And there's a way that those brokers came to that $1 million based on, a bunch of sim and adjustments and add backs and normalizations and stuff. So
it's all just like lick your finger, hold it up. I think it's worth X, Y. Many times it's that. Walk me through the business economics. You are going out, you're changing light bulbs. Yes. But it sounds like you're doing EV projects now. I thought I heard you say something about water
efficiency. So like low flow toilets, shower heads, the like.
You're providing those. Are you just in Tampa? Are you have you expanded outside of Tampa? Like, what does it look like?
So coincidentally, the business was just headquartered here in Tampa. We actually, the most of the work we do is outside of Tampa. So we truly work coast to coast.
Really?
We sub out all of our labor. Yeah.
That's what I was going to ask. So are you just building relationships with like national, I don't know, multifamily owners?
Exactly. So I know I'm in with the big institutional property management groups. You get in with their kind of like construction management folks that oversee different regions. They send you work. And then we're also in on the ownership side or on the acquisition side of the groups that are buying these apartments. They will come bring us in like right either when they're during due diligence or right after they close to come in and do the work that we do right after.
And the work that you do is project based. You're not doing any recurring services where I can't.
No. So I guess I'll help paint you a picture. So like we're working on a project right now in Dallas, Texas, where a group that buys value add apartment buildings said, hey, Chandler, we got a new acquisition here. We want to do the lighting upgrades. We want to do water efficiency upgrades. We want to get EV charging stations installed. Can you come out here and give us a bid? So we send someone, whether that is us in-house, flying from Tampa, or, we have some guys that work in Dallas or work in Texas, having them drive up. Conversely, we can also get some of our trusted subcontractors to go out on site to do our initial assessment, if you will. That's basically the data gathering to put together so we can make a bid. Exactly. So whether it's our own team or one of the subs that can do it, we'll basically get on site, collect all the data that we need, get it in our kind of bid design software, put all the sexy ROIs, energy saving projections, revenue increases from it, throw a nice, really low cap rate on it because maybe that value add is maybe a 4 these days. I don't know, most likely not. But anyways, we try to paint like a compelling financial and story to completing these projects, because that's the cool thing about ours. Like, they're necessities, and they also is pretty significant utility and energy savings and the like to doing our projects.
I was going to ask, so like there's probably incentives to do it because there's savings on the utility side, but I'm guessing there's also either state and federal incentives to install those things, like tax incentives or credits, rebates.
Yep. So it's primarily through the utility providers, and it's simple as looking up on their website. You can also use softwares to figure out who, so to figure out who the utility providers are, but go on any utility provider. I'll use Duke Energy because that's a big one. We do a lot of work in the Carolinas. Duke Energy, go right on, whether it's apartments, multifamily, industrial, retail, whatever, they have a program for it, and it'll spell out what the rebate is. So that's cool too. And what we include in our services. Hey, by the way, the project's going to be $100K. You're going to get 200, or you're going to get 20K of energy savings. Duke Energy is going to pay you $15K for doing this project. And all the while, hey, you can also apply for this like tax rebate. Here's how your accountants could do it.
It's similar. We have a tree trimming business in Dallas, and we have one guy who goes out and does the bids, essentially. Like, we get leads that come in, he goes out, meets with the customer, does the bid, the estimate, and then we sub it out to people. So it's like a very kind of similar thing. I'm curious though, like, is that the best funnel to sort of find people, is to find those utility companies or states that have the best rebates, understand what they are, and then cold contact into these multifamily properties? Or are you doing any of that, or are you just relying on?
Yes, okay. That's a great, So what I'm doing right now with this new product that we actually just became a preferred distributor and installer of, it's called Aquamizer. So without boring too much of your listeners or you yourself, basically, it's literally like all this thing is. So instead of like, think of like there's like the old toilets that were like 5 gallons per flush, like incredibly inefficient. Yeah. The new ones today are, call it like 1 to 1.6 or so, the low flow flushing toilets. What this thing Aquamizer does is it goes right into any toilet tank, converts any toilet to 1 gallon per flush without reducing the flush velocity. It stops all toilet leaks and running toilets. It's like literally as close to a silver bullet as I can think of in my time in this space. So we basically know that this, not only are the ROIs like a no-brainer itself, but in Tampa, the Tampa Bay Water-wise will give owners $75 to install one of these things, which is basically like half the cost of it. So now I'm on a cold call campaign right now. I'm ripping cold emails. I just got this new software where I can look up hotel and whatever commercial real estate owner directly, hammering these folks saying, hey, I can reduce your hotel's water and sewer expenses by 50% before the year ends. The city of Tampa is going to pay for half the project. Give me your water bills. I'll run you a free evaluation. We'll get this thing kicked off now based on the effect of that. So we're about to go rip with that.
That's awesome. Do you have any idea what your customer acquisition cost is right now?
No, I'm in the early phases of that right now. Like literally, as far as like, I just got an SDR set up.
It just feels like there's so much opportunity. If you're like, okay, they're going to pay me $75. Cool. I at least know I can spend $75 per customer, right? Maybe that's physical letter, texting, flyers, like whatever it is. It's like, I don't know that you're necessarily going to Facebook and Google and those types of places, but like, is there an average project size that you're getting? Is it like $10,000 per project, or is it too variable to even?
No. So we do have an average. I would say like it kind of differs across our different project lines, if you will. I would say across all of our project lines, our average project size is around $55K.
Wow.
Yeah. So we're doing work on, like 200, 300 unit apartment complexes. We're doing work on similar size hotels.
That's probably part of the reason why your net margins are 10%, because even though you're charging $55,000, you've got to sub it out. If that was all in-house, you probably have a lot higher margins, but it's not.
Exactly.
You're almost a lead gen business for local contractors to go and fulfill.
Exactly. Yeah. But we got to also, we'll get on the scope and everything, but I don't know. I see your mind's racing right now. So if you have any other ways to help me make more money, I'm game. Let me know.
Dude, I just think that there's so much opportunity in this space for a couple of reasons. There's like some big macro tailwinds that I think are helping you. Between 2000 and even today, because of the great financial crisis, they just stopped building houses. Stopped, right? Mm-hmm. So we're historically underbuilt. We've done a little bit better through COVID, but we're still underbuilt relative to where we should be. The age of houses are aging. And this isn't just homes. This is apartments, condos,
Oh yeah.
any dwelling setting. You've got a lot of people who are going and remodeling. They're upgrading. Like there's CapEx expenses that are happening at a faster clip. So that's like a macro trend that I think is just totally pushing your industry. And then on top of that, you get to also take advantage of the home services market. My mind races because if you've got all these relationships with multifamily owners and you're just doing the upgrading the light bulbs, whatever you want to call it, right? Mm-hmm. Well, what else could you be doing for them? There's so many other things that are done from like a home services perspective for these multifamily units. Tree trimming, plumbing, electrician, like all these other things. And again, because you're already built like a lead gen organization, you don't have to do the fulfillment. You could just be generating these leads and selling them to the local contractors that you build a network with. Like you could start in Dallas and some of these other areas where you have some concentration and build out a good network, refer out to them. And then it's just a numbers game and you're getting 5 to 10% net margins for not doing and fulfilling any of the work. So I just think I think it's really, really cool what you got going on.
Yeah, thank you. And, we're always trying to get better and grow. So that's my big objective this year is like, I would say the running joke in ETA is always kind of like, yeah, you never really want to buy yourself a job, but I bought myself like 10 jobs, but that's what I wanted to do. I wanted to get my hands dirty. I was literally a financial analyst before buying this. And I'm like, yeah, I'm going to do invoicing. Yeah, I'm going to do insurance. Yeah, I'm going to sell. Yeah, I'm going to organize. Right? Yeah. I was literally running like Excel Argus models before I got in the driver's seat here. I
was 30. How old was I? 32 when I bought my first business. But I had to get a lot of experience on somebody else's dime, right? Like I needed that. This was a situation, and I tell people to do this a lot. You minimize your downside risk by having the seller note and basically only putting 25% down, which was incredible. But you mitigated the downside risk. So even if things went terribly wrong, you weren't losing your house because you signed an SBA note that you couldn't meet. To finish up on the business, though, here's my last question.
Yeah.
What did you learn? Like, what were the biggest lessons that you learned over the last few years from the buy process to the peak valley process to now looking to grow and scale again?
I think learning how to sell is probably the most important skill that you can have as a business owner. Maybe not even selling. I'm not like getting on the phone with someone, but learning how to market, learning how to generate leads. I guess that is probably the better term. If you can generate leads, that is a business, or that is a skill set that you can apply to literally any single business. Obviously, there's going to be nuances between the different businesses, right? But if you can go, whether that is, hey, you've just identified this new area or this new problem that needs to be solved. Let me go build a business that can go service this gap that I recognize and then drive leads through it. Or that's, hey, I'm going to buy this existing mousetrap, right? Or this existing business that has a great fulfillment, that has product market fit already. Let me go drive leads through that. Like, you will never go broke, or you will never be broke ever if you can learn that skill. And that's something candidly I had zero idea how to do. And it's something I'm trying to get better at every single day.
Do you think that was a hindrance for you when you saw the decline in 2023? What was the year? Or
it certainly could have been, but when I tell you, like, no one at all was spending any money and there's no transactions getting done, like, I was banging my head. I was giving discounts. I was going like anything and everything that you can think of. The answer was, hey, we're punting this project to next year, or hey, we got to wait and see where the market shakes out.
I want to like drill down on that, right? Because there's almost no way you could have predicted that was going to happen.
Yeah.
What lesson did you learn from that experience that you'll take with you into the future, into every other deal that you do? Is there anything that came out of that you feel like, man, X, Y, Z is so important?
Yeah. Recurring revenue. Okay. I'm done with project-based businesses. I'll tell you that. Sorry, it's pardon my French. It could be project-based. It could be project-based if your margins are like 50+%. And it's like, okay, it's super lucrative. But hey, if the margins are skinny to begin with, it's in a tough industry. It's not like, I'm sending a PDF to someone or doing an Excel model. Like, I'm sending a crew of blue collar dudes, either in trucks, flying somewhere, whatever have you, to go do physical work on an apartment building with residents who are always kind of up your butt. Hey, what are you doing? All this stuff, complaining. Like, And then I hear the end of it and every single bit of it. Or your guys are out there smoking cigarettes on site and the client's like, hey, you guys can't be smoking cigs on site.
I think that's a really, really interesting observation, because you could have gone into it and said, well, we're going to buy the business. Rates are historically low. The Fed's printed a lot of money. They'll probably have to raise rates in order to tamp down inflation. Therefore, if and when that happens, I need to have a diversified revenue stream, right? Yeah. You could have done that analysis. Honestly, nobody was doing that analysis.
No.
But the better analysis moving forward is like, I just know if a business is all project-based, I need to diversify my revenue type.
Exactly.
And so I need let me get into some recurring revenue, because I know
exactly.
That's risk.
Yes. Or on the flip side too, is with the lighting projects and the EV charging projects, which was like the bulk of the projects we were doing that year, that's like truly that's, I would say it's cyclical, right? Like that comes and goes with like the flow of money coming through the system. But that product, the Aquamizer, I was just telling you about, which is again, product-based or project-based business model, coming in, installing it, boom. That thing, given where the ROIs are, how compelling the financial incentive is there, I think that will sell come hell or high water. So that is a point, though, to your point of hey, if this is going to be up and down, whether it's revenue, whether it's project-based or recurring, and we have this that's just project-based, but it's going to be steady through all times. To your point, that was a long-winded way of saying yes, I agree, but it doesn't have to be recurring, even though that's the dream.
Have you added any recurring type of revenue streams to the business? I've
tried to think about it. Typically in our world, what that looks like is master service agreements of hey, we're going to make sure your lighting is in place. But number one, I don't have any in-house people to go keep those, and it would have to be me doing a second agreement with a subcontractor, which could be done. I don't know. That sounds to me I don't know if that juice is worth that squeeze. But other things that we have thought about, primarily, number one would be the EV charging stations, doing some shared services agreement where hey, we'll split the cost of this EV charging station with you, and then we'll split the revenue that the machine spits off for the next, 10 years until we get paid back, something like that.
That's what I was going to ask with the EV charging stations is the light bulbs, those are fairly easy to change.
It's a commodity. Yeah, it's a commodity business.
But the maintenance of the EV charging stations, what happens when one breaks, or what happens when they want to add another one, or what, there could be something there with managing the EV charging stations and then working with local vendors to provide support or something like that.
Exactly. You could think of that as an EV charging as a service almost. Hey, we'll come in, we'll do all of it. You basically lease the machines from us. I guess that's another way of thinking of it. And we'll do a rev share that's more tilted towards my favor. Again, it just depends on the client. A lot of the clients hey, I know I'm losing money on this in the long run. I just want to pay you to install it for me up front. I'll take care of it in the long run. Okay, great. We can do that too. So there's a billion different ways to slice a cat, right? It just depends on what the owner is looking for.
My favorite thing is the fact that you've paid the business off. You don't have any debt on the business already.
Yeah.
It's amazing.
We have a line of credit, but obviously that is, for a construction business, we do try to get as big of a deposit as we can up front for our projects. But, we're small fish in a big pond. We're doing work for multi-billion dollar businesses. Oftentimes you're hey guys, can I get that 50% deposit? They're you're lucky we're giving you 20%. I'm all right, thanks. Cool. We'll do it.
I love this business as a wedge into the relationship with those large billion-dollar multifamily, real estate companies, where once you're in, you have a relationship, maybe you start expanding your product offerings. But
exactly.
I have some rapid fire questions for you. Are you ready?
Yeah, please. Let's let it rip.
What do you love about this business?
How little overhead there is, how small my team can be.
Cool. All right, what do you hate about it?
How hard it is for how little the margin is. It's a really high, if at scale, this has to be a super high volume business. I'm trying to get it. I'm trying to get it there.
What industry or business model are you the most jealous of right now?
Probably SaaS. Anything that is SaaS is beautiful. You're pretty much selling air almost.
It's very true.
I'm jealous of.
If you have 2 hours in your day, you don't have any personal or family responsibilities, and you don't have any work responsibilities, what are you obsessed with right now? What are you spending your time on?
Big answer for me is golf. Maybe not the full hours, at least maybe an hour on the range session. Golf and then paid ads, media buying. That's what I'm kind of infatuating or getting head over heels in right now for the bootcamp stuff.
All right, last question.
Yeah.
What advice would you give to your pre-entrepreneurial self?
I don't think nothing is going to pan out how you expect it to be. So no need to get worried about stuff, and nothing will be as bad as you think it's going to be. So don't sweat the small stuff. Just keep level headed, have a good attitude, be prepared to roll the punches when they come, because they will come. And other than that, you'll be fine and happy.
That's a great perspective. Chandler, this has been awesome. Where can people come find you? Where's the best place?
Yeah, Nick, this has been awesome for me too. You're a great podcast host, and a pleasure again to be on here. But where they can find me is Twitter is the best place. It's going to be at Chandler Reed SMB. I'm also on LinkedIn. You can find me there. You're not going to see my profile on it, and I'll be full Get Green NOI, because that's what my clients that come to expect to me. But X is where I have some fun and drop some knowledge on the SMB world.
Cool, man. Well, hope to see you around. This was awesome. We'll talk soon. Well, as you saw with Chandler, buying your first business is no walk in the park. And if you want to learn more about buying your first business and the whole process, check out this episode I did with Chelsea Wood. This is episode 65, where we walk through exactly what you need to do personally to prepare for buying that first business so it's successful. Again, that's episode 65 with Chelsea Wood. You can click on this link if you're on YouTube, or check it out on Apple or Spotify podcasts, episode 65. But with that, I'll see you guys next time, and bye-bye.